So you always hear the success stories of Apple, Tesla, and Amazon and their ridiculous returns. But you and I both know that the real winners on Wall Street are the stocks no one's ever heard of. Forget 1000% returns over a decade. I'm talking 1000% returns in a day. I'm talking about the so-called hidden gems of the stock market, the penny stocks. So today I'm going to be looking at 8 different penny stocks to watch for 2022. Hey guys, welcome to the channel where I break down the tough to understand financial stuff that impacts us all. So I just want to say straight up that stock picks are far from being a sure bet, especially when they're speculative penny stocks. And it takes a lot of research and a lot of work to understand whether or not a stock is going to be a good buy or not. And even then you might not get it right. So the stocks I'm sharing with you today aren't really my picks. Instead, I'm going to be sharing some of the penny stocks that top performing hedge funds have been buying up in the last few months. And if you're wondering how I did it, well, in this case, I used Insider Monkey, which is a great resource if you're trying to track important purchase or sell orders of stocks that you're tracking. So what I found was that of the top performing hedge funds, not a lot of fund managers are actually buying up penny stocks. And that's because penny stocks are pretty risky and speculative. So there'd have to be a really good reason that hedge fund managers wanted to buy them. So even though they're risky, I think it's really interesting to look at what they have been buying in that space. So I basically just scoured through their buy orders of the last 2 quarters and then took note of any stocks that had a market cap of less than $350 million. For the sake of time, I only looked at the top 10 performing hedge fund managers of the last quarter. Okay, first up is Tech, and with a market cap of 418 million, it's a little bit bigger than a penny stock, but I thought it was an interesting one to include anyway. It was bought by the London-based investment firm Kylie Partners, who saw a 40% return in Q3 of 2021, which is especially impressive since the market was going down. So Tech is a German-based blank check company, which basically means that it's a SPAC. Its focus is on the merger and acquisition of European tech stocks, and on its LinkedIn profile, it says they're looking to partner with a fast-growing EU tech company and provide their founders with an efficient and fair way to go public in the US. And they listed in June of 2021, so they've got about 12 months before they have to form a partnership. Buying into a SPAC at this stage is obviously very risky because you don't know whether the company that they're going to merge with is going to be worth your money. But SPACs have been proven to be very successful over the last couple of years, as I'm sure many of you know. And seeing as Kylie Partners was the best performing hedge fund of Q3, perhaps they know something that we don't. They added it to their portfolio for the first time in Q2, and they increased their holding in Q3. And as of Q3, it actually makes up a huge 25% of their portfolio. Plus, it's held by around 40 other hedge funds. So definitely risky, but perhaps worth keeping an eye on. Okay, next on the list is Applied Therapeutics. It has a market cap of $253 million. So Applied Therapeutics is a clinical trial biopharmaceutical company developing drugs that serve medical needs that are significantly unmet in society. It also says it can amplify the time it takes to get these drugs to market through its sped up clinical trials. So this stock was bought up by a New York hedge fund, Knoll Capital Management, and this firm, Knoll Capital, largely invests in biotech, so presumably it has superior knowledge of what they're working on and what their potential is. For example, I personally tried to have a look into this company to understand what they're working on, and I was a bit overwhelmed by a lot of the science talk. And the fund manager, Fred Knoll, actually made a small fortune back in 2016, and headlines as well, after the cancer drug that he'd invested in jumped when Pfizer offered a $14 billion buy offer. So Knoll Capital bought Applied Therapeutics stock twice last year, and as of Q3, it makes up over 8% of the portfolio. So next is Entero Bio Limited. It has a market cap of $89.52 million. So Entero is another buy from Knoll Capital Management. It makes up 6% of their portfolio. Similar to Applied Therapeutics, it's also a clinical stage biopharmaceutical company. And it too specializes in developing drugs to serve unmet medical needs. And their lead product, EB613, which is an osteoporosis treatment, will enter its stage 3 clinical trials sometime in 2022. So definitely one to watch. Okay, the next 2 on the list were also bought up by Knoll Capital Management, and they're also biotech companies. The first is Innovus Bio Inc. It has a market cap of $166 million, and it's developing drugs for neurodegenerative diseases like Alzheimer's and Parkinson's. The next is Applied Genetic. It's another very small biotech with a market cap of just $87 million. It is based in Florida and it specializes in rare inherited diseases. with a focus on restoring lost vision. Knoll Capital is one of the few that actually bought up several penny stocks. Most of the hedge fund managers bought up none at all. So the next is also from them, and it is Silvercorp Metals. Knoll increased its position in this company by a pretty small margin just in Q2. It is a Canadian-based firm with mines in China, and it is also China's biggest silver producer. Alongside silver, it also produces lead and zinc. As of Q3, around 16 fund managers hold this stock, including Knoll Capital. It's worth noting here that mining companies, especially exploration companies like this, are really speculative and risky. After all, the firm could find a new source of silver or some other metal, and the stock price could do really well, or the stock price could flatline over several years because they don't find anything. Okay, next on the list is Viracta Therapeutics. It was bought up by global hedge fund manager Adams Street Partners. And looking at Adams Street activity over the last 2 quarters, you can see it's a pretty active firm. In the last 2 quarters, it's added 29 new companies to its portfolio, and just 3 qualify as a small cap penny stock. So I think that's pretty interesting. Viracta Therapeutics, being one of them, has a market cap of just $143 million. It's a clinical stage firm focused on developing medicines and the treatment of cancer-causing viruses. And the stock was a new addition to Adams Street in Q3, and it was about a $5 million stake. I can see it's held by around 11 hedge funds, so not a lot. And to be honest, about as many hedge funds appear to be buying as selling the stock in the last 2 quarters. The next is another purchase by Adams Street. It is CVRX. CVRX has a market cap of $240 million, and it develops therapies related to cardiovascular disease. The company recorded a revenue of $3.1 million for the second quarter of 2021, which is a 150% increase from the previous year's quarter. It also saw $2.1 million in sales in the US and $1 million in Europe. The company's signature product is Barostim, which is an implantable neuromodulation device to treat heart failure. Adams Street added the stock to its portfolio for the first time in Q3, and it bought up about $500,000 in stocks. Next on the list is another biotech company, which I think is really interesting because the money obviously sees this industry as a key play moving forward, even if it is speculative. Aptinyx is a clinical stage biotech company. It has a market cap of around $200 million. It is developing therapies for disorders of the brain and immune system. It's also working to treat chronic pain, post-traumatic stress disorder, and cognitive impairment. Like a lot of these early stage or clinical trial companies, it is in net loss in 2021. Its net loss was $21.2 million for the third quarter of 2021, and that compares to a net loss of $11.3 million from the year prior. So there you have it. These are the 8 penny stocks that I found being bought by the best performing hedge funds of Q3 2021. Like I said before, these top hedge funds are primarily dealing with major companies, if not blue chip companies. I saw companies like Google, Amazon, Facebook, or the metaverse on there. So I was going through a lot of company orders just to find these penny stocks. I thought that was pretty interesting. You know, these hedge funds have a bit of a reputation for being active risk takers, but for the most part, they're buying up major blue chips. And the penny stocks that they were buying up were far and few between. Which actually leads to the question, should you even trade penny stocks? Well, as I'm sure you know, penny stocks are popular because they don't cost a lot, which makes them great for swing traders. But they're also popular because they appear to be full of potential. Everyone is hoping to buy pennies in the next Amazon. But for every Apple and Amazon, you'll find countless companies that started small and stayed small, or worse, became smaller. In other words, penny stocks are, as you know, very high risk. Yes, you could see the value of your penny stocks explode overnight, but you could also see the opposite occur just as quickly. Plus, if your penny stock is newly listed like a stock, there's usually limited financial records to delve into. So it can be difficult to see how healthy the company is. And you should also remember that most penny stocks do not pay dividends. That's because, being a small company and all, any profits that the company does make will simply reinvest them back in the company to continue to grow. And it's also worth remembering that a lot of major companies on Wall Street, like the major tech stocks, never actually started out as a penny stock to begin with. Most of the time, they listed when they were already pretty big, and they just happened to keep getting bigger and bigger. In fact, there are very few cases where a stock went from penny to blue chip. Ford could be the one example I could think of. That doesn't mean that penny stocks aren't worth watching, and they're certainly interesting, especially if hedge funds that are performing well are investing in them. They might know something that you don't. They've got the time to do the research. They've got the time to understand the industry that they're investing in. I'd love to hear from you. Are you purchasing any penny stocks? If so, which stocks are you keeping an eye on? That's it from me. Thanks for watching. Don't forget to hit the like and subscribe button. Thanks again.